It's the start of another trading week, and with it comes another installment of the week ahead. Looking to see what's in store for the markets, I'm joined by Dimitris Kantzelis, Chief Market Strategist at XMarkets. Dimitris, last week China was definitely at the forefront with the yuan devaluation, spurring talks of deflation and a global growth slowdown. This week, are China and commodities and the dollar a source of concern for traders?
Last week actually we saw the Chinese government devaluating the local currency, devaluating the yuan by more than 2%, which signaled the biggest one-day drop since 1994. Was a very big move. This move dropped the commodities a lot. The Bloomberg Commodity Index dropped to a 13-year low, and particularly the oil touched a 6-year low near $42 a barrel. So clearly China is exporting deflation right now. We saw a panicking initial reaction from the markets, but I think right now that the market worries dissipate after the initial shock. So what we have to do is we have to focus on this week data, which are really important. We have the US CPI and the FOMC meeting minutes to watch out, because what the markets are waiting is the Fed call in September. Are they going to raise the rates or not?
As you've mentioned there, on Wednesday we'll see the release of the Fed meeting minutes for July. The minutes will give us an indication whether the Fed will raise interest rates in September or not. The uncertainty around the Fed and tightening adds to the volatility in the markets. Will these minutes finally give us some clarity?
What is really important this week is we really have to see the CPI numbers. The inflation is the only problem, I think, right now that is not forcing, or to say it in a better way, that has not already forced the hand of Janet Yellen to raise the rates already, because we've seen some economic growth, we've seen some better spending, and also we have already saw solid gains in jobs, as they said in the previous FOMC meetings. The unemployment is already touching a 7-year low at 5.3%. So for me, a September rate hike is highly possible. We have to see, I say again, we have to see the CPI numbers this week, plus the September job numbers, which are really important. But from this point of view, I believe that this is the correct time, and the economy, I think, that needs a rate rise within the 2015. I think Fed and Janet Yellen will deliver a rate hike in September.
And what other events do you think our viewers should look out for this week?
The summer is finishing, so every end of the summer we have the Jackson Hole Symposium, which is hosted by the Fed. The Jackson Hole Symposium, where Ben Bernanke has already signaled the QE3, and last year we saw a big move from Mario Draghi, which was like signaling the Eurozone's QE. So what we would be expecting this year? We would be expecting any news, any hints from Janet Yellen. Last year, she didn't give any clues, so we will be expecting some news on whether the Fed will or will not raise the rates in September or in December. So the Jackson Hole Symposium starting Thursday until Saturday will be a very important meeting, and the markets will be waiting any news from there.
Well, that's what's in store for the markets this week. We'll be following the latest news and data, so make sure you keep tuning in to Dukascopy TV.